Hello, this is Sue with your weekly video of the happenings at Diamond Mortgage Group. As we've mentioned before, we put these videos together to provide you with information in all areas of the ever-changing world of mortgage financing. So this week, covering the insurance end, we are extremely happy to have a guest speaker, Donna Yother. Donna is president of Savit Insurance in Waterford, Connecticut, and has been in the insurance business for 26 years. Donna is here to explain the recent changes in flood insurance mapping and how it may affect you. Hello, Donna, and thank you for coming and telling us what we need to know about flood insurance.
Thanks, Sue, for having me as your guest. I know there are many of you who probably don't know that FEMA just completed a remapping project in 20,000 communities across the country. New London County was included in this project. This was a very big project for FEMA that has created major changes for our coastal communities. If you're in a real estate business or mortgage business, you probably have heard or even been involved in a deal that was affected by these changes. If you're not familiar with flood insurance, the premiums can be anywhere from $350 to $4,000 a year, depending on your home value and how close your home is located to the water. The remapping project was implemented due to flood risk change over time, altering the floodplain boundaries. The updated maps will help communities manage the flood risk and disaster recovery more efficiently. The final result, FEMA produced updated digital flood hazard maps known as digital flood insurance rate maps. To summarize this project, when the property is remapped to a higher risk zone and you hold a mortgage, the lender will require mandatory flood insurance. If you were to refinance your home, you could be required to take out flood insurance because your flood zone has changed. If you were to sell your property and the buyers take out a mortgage, they'll be required to purchase flood insurance, or they could even possibly require the seller's existing flood policy. This requirement applies to all federally regulated lenders as well as government-sponsored enterprises such as Freddie Mac and Fannie Mae. If you're remapped to a lower risk zone, good news for you. Your lender will no longer require you to carry flood insurance. However, the risk of flooding is reduced but not eliminated. It's probably in your best interest to continue with your existing policy, get it converted over to a preferred flood policy, which will save you some money on the premium. If you have an existing flood policy and your zone has changed, call your insurance agent to grandfather your flood policy. Grandfathering a policy allows anyone who currently has flood insurance before the new flood maps are adopted to keep their current coverage and retain the low risk zone rate. If the new mapping is more favorable, policyholders may opt to shift to the new zone rate. I know this subject can be very confusing, so call your agent if you have any questions, or call Savit and speak to one of our licensed, experienced agents that can assist you.
Well, thank you so much, Donna, for your valuable information and your expertise.
Oh, you're welcome.
A lot of good stuff here. It was a pleasure having you here, and if you would like to contact Donna or any members of her team, you can find all their contact information here in this video. Thank you so much for watching, and please do not ever hesitate to contact us if there are specific topics you would like us to discuss. We are here for you. Thanks again, and see you next week, and stay tuned. Here comes the judge.